Hi guys, you're back on another sharing for the Moneyball Journal. The stock market, in my opinion, is a very interesting creature because it presents itself in all forms that it wants to. You can ball all you want, but the stock prices are still going to come crashing down if the stock market wants to. And when you think that the stock market is already at the top, it can prove you wrong by rallying to new highs. This is why I'm a firm believer of equipping myself with a bag of investing strategies that will come in handy so that I know how to react when the stock market shows me something different. This is similar to taking school exams and tests. Okay, I know that's a time that you may not want to remember. Okay, so let me be quick on this. So do you remember when you were in secondary school and you have to solve all those very difficult, weird looking geometry questions with weird looking shapes? And what we did at that time was to try all sorts of shapes so that hopefully by the time we go to the exam, somehow something that is familiar will come up during the exam and we can apply what we have practiced. Or for those who have taken economics in JC, you may have tried writing out many answers to different types of essay questions so that hopefully in the exam, one of those essay questions come out and you can just regurgitate and write in a good essay. So actually that's the same as what we did in school. What we were doing then was to equip ourselves with a bag of answers so that we know how to deal with different types of questions if they come up in the exam. And that was the same for the stock market. The stock market is not stagnant. Over the next 10, 20, 30 years, yes, the stock market is likely to continue to go up. But within that time frame of 10, 20, 30 years, the stock prices are going to fluctuate and move in all sorts of direction. They can go up, come down, move sideways, or exhibit some kind of very interesting price movement. Some of you may feel puzzled as to how we manage to do well in stocks investing. So one strategy for sure is to only buy and invest in the good and quality companies. Another strategy is knowing how to approach different market conditions. So in today's video sharing, I'm going to share something about DBS stock, which some of you may not have known even if you have been investing in DBS for many years. I'm sure all Singaporeans will know about DBS Bank, and in fact, it is one of the more popular local stocks that Singaporean investors invest in. Yes, it is a good investment in general, but the way you invest in can greatly affect your overall returns for this investment. Most people invest in DBS because of the dividends, as it is one of the companies that have a better dividend yield. Then there are those who invest in DBS without knowing whether they are after growth or income investing, but they just invest in DBS anyway since it is a respectable company in Singapore. So no matter whether you are after growth investing or income investing, the way that you invest in DBS really can greatly affect your returns. Many thought that since they are investing in DBS for the dividends, then it doesn't matter what price they buy the stock at. So let's take a look at the DBS chart. This is the overall view of the prices of DBS over the years. If you realize, DBS is a stock that has prices moving in a highly and largely cyclical manner, which means that if you buy and hold when the prices are high, near the top of the cycle, you'll be suffering capital losses for many years. It takes many years for the dividend income you receive to help you break even from the capital losses before you enjoy the overall returns. If you happen to buy and hold near the middle of the cycle, you will be experiencing a constant fluctuation between capital losses, 0% capital gain, and capital gains. So here are my investing thoughts and strategies for DBS, and I'll present to you two scenarios. So the first scenario is if I have the intention to buy and hold DBS for the long term to enjoy the constant inflow of dividends, I will only buy it after the prices have hit a resistance and come down substantially from the top of the cycle back to a recent strong support level at around $23. If I'm not that anxious to hold DBS stocks, I'll wait until the price retracement goes deeper until about $20, which is a resistance turned support if you look at the overall trend over the last 20 years. In the meantime, I will invest and put my money into other investments or other stocks that give a better upside potential. So under scenario 1, even though I'm investing with a long-term view, I will still not rush into things and rush into buying DBS stocks because the opportunity cost for not holding on to DBS stocks may be well less than the capital losses that I will incur if I rush into buying DBS stocks now at a bad price. So scenario 2 is when I want to buy DBS stock just to enjoy the capital gains from a cyclical stock like DBS. So how I'll enter DBS stock under scenario 2 will be the same as how I explained under scenario 1. But when do I exit? Okay, I will exit when the prices reach the top of the cycle. Just like in the recent COVID crash, I bought some DBS shares and sold them when the prices were facing a temporary strong resistance. Because for me, the primary purpose of investing under scenario 2 is more for growth investing to enjoy the capital gains. So no doubt, DBS Bank may possibly raise the dividends further in the coming quarters if the COVID situation continues to improve. And by that itself, that may help to drive up the prices, but the potential upside may no longer be that attractive, and there are other investments that I can better deploy my capital to enjoy a better return. In today's sharing, I hope that you guys learned that in order to improve on our investing returns, we cannot only rely on just one strategy, the buy and hold for the long term at any current price strategy. And even if you are looking for capital gains for growth investing, it is also possible to invest in a cyclical stock like DBS, which is well known for its better dividend yield. We need to know and have a bag of different investing strategies because a different stock or a different market conditions call for a different strategy. And this is the same as what you have done for your school exam and test, preparing different types of answers for different types of questions and going into the exam hall prepared. If you only go into the exam hall with just one type of question, with just one type of answer, you know you're not going to do as well compared to those that come prepared for more. Unless, well, because of luck. Thank you for watching and stay tuned for our next sharing.